Hi, this is Alkemy with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 5th of February. Starting out with the FTSE 100, which has regained some of its composure after the tariff rug pull. That was down towards 85.20, but an uptrend line there from earlier in the month running through around 85.30, now above that looking for 87.20, which is what we were looking for before the tariff situation exploded. Above 87.20, the best case would be up to the 9,000 level, which is the top of the overall rising trend channel from the beginning of last year. Moving on to the DAX, and here it's obviously been volatile, but as you can see from the three candles so far this week, we've actually had an effect where the markets wanted to bounce, a bit like cork in water, a type of bounce there, bouncing off the top of the old rising trend channel, the black one there, around 21,300, and especially yesterday, quite a steady candle, quite a strong hammer candle there for this market. Gap to fill up to 21,700, so that's obviously the initial target. On the downside, we don't want to see anything lower than 21,000, which is recent support, and the last gap higher that we had earlier this month. Moving on to the Dow, and here, obviously this market in the sort of right in the front line of all that's going on at the moment, but here we had our probe towards the rising 50-day line. We were factoring in that we might actually have to hit it or go through it or go below it, but so far we bounced above it, which is a very positive technical situation. Consolidation above a rising 50-day line, a very good leading indicator. And here, so we're waiting for 45,000 as the initial target, the record highs, and then an end-of-day close above 45 would take us up to 46,400 at the top of that rising trend channel from March last year. All the while, the 50-day line potential support point and a potential buy point, and an end-of-day close stop loss as well. Moving along to the situation of Bitcoin, which has been, was always volatile, but maybe a bit more volatile than usual. Here we've got the problem that the 50-day line is now falling, and while we're below that at 90, just under 99,000, there's the risk of another test of the 90 to 92,000 zone. There's an uptrend line there from November, which is at just under 94,000. RSI at 44, so it's on the wrong side of neutral, and that does suggest that we have a risk of rolling over, or at least another test of sub 93,000 over the next few sessions. Moving on to gold, and this is the market which seems to be the recent winner by quite a long chalk. We were looking for a rather ambitious target of 29.70 by the end of this month, and although that looked a bit ridiculous even just a few days ago, that doesn't actually look possible now, while we're above 2800, which has also been tested as new support just to start this week. Moving along to the situation at pound dollar, where I think Deutsche Bank said on January the 10th that this market was a sell, and obviously the following weekday became a buy. The situation now is that we've managed to get or find support at and above the old initial 2025 support there at 123.50. Above that, looking for $1.26, and then potentially up to the 200-day line at $1.28. Obviously, that kind of rebound is suggesting no interest rate cuts are on the horizon, which obviously might be disappointing for one or two people. If you're closer to the market than the 50-day line there at $1.25 is the pivotal point from a technical perspective. The other point to note is that we've had an RSI rebound off neutral 50, which tends to be a leading indicator on the upside. So probably one would say above the 50-day line, looking for the 200-day line here over the next couple of weeks. Moving along to the stocks, and starting off with an old favourite, probably everyone's favourite it seems, in terms of the interest in this company, Avacta. Here we've had our umpteenth rebound of an uptrend line there from June, but we didn't quite hit it. I suppose you could argue that it's just around the 46 pence area, so that's where the line is. Looking for an end-of-day close above the 50-day line there at just above 48 pence to give us a move up to the main resistance line there from July at 55 pence. The other thing which is exciting at the moment, especially if you are a chartist, would be that we're waiting for both the 50 and 200-day lines to rise. If they both start rising, then that could suggest we're in the run-up to a golden cross, which is, as people who watch this video will know, is one of the strongest parts in the cycle. On a fundamental basis, we've had an additional broker come in onto this company, so maybe some people might be thinking that there will be a fundraise, but as I said, at the moment, the technicals at least look stable to positive. Moving on to Alkemy, where it's been up all the way almost since the autumn. We've had the sort of 3 steps forward, 2 steps back, or even 1 step back at the moment, and looking for £2, which we'll be looking for quite some time, while we're above the 50-day moving average in the latest gap there, £1.40. If you're close to the market and want something better than that, then 160, above 160, we're looking for £2. In fact, we would be looking for much more. The next level up, probably along the lines of the line I'm drawing at the moment, which is actually towards the £2.90 level, if you are a fan of the situation. Obviously, you can see late 2022 we were much higher than where we are at the moment. Moving along to the situation at Audioboom, where we're hoping that this is the rally that turns the shares around. We've had an RSI, rather a 50-day moving average rebound. RSI pushed back above the neutral 50 level as well, and basically trading on either side of the second big target there. First one was £3, second 380, above 380, looking for up to the £5.10 level, hopefully by the end of this month. Nice hammer candle to start the week as well, so above that £3.60 area. Hopefully the shares could keep going. Ideally they stay above 380. Moving on to Eurasia, which seems to be, well, rather belatedly going for a Trump trade type of win. We've hit our first target there, which seemed to be almost impossible, 3.25 even just a week or two ago. Next target here up to 4.5 by the end of this month. Obviously, this is a company affected by the situation in Russia and Ukraine, but while we're above 3 feeling reasonably confident that we can keep going towards that 4.5 level. Moving along to a stock where the rug has been well and truly pulled. It was in the race of Eurasia versus Ferrexpo, the Trump trade. This was the winner until yesterday, when the shares absolutely collapsed. We were in a rising trend channel there from the end of July and broke back below the 50-day line at 101. That tends to be a good indicator. We had a bounce off that back earlier this month, and obviously this time straight down below it. The low basically meeting that uptrend line from September, which is obviously a surprise it would hit that. Current situation, though, if you are somebody with a high octane risk appetite, above the 200-day line at 63 then one would be going for at least a gentle rebound, maybe up to the old November peak at 86 but this looks as though it's been a very painful situation indeed. Moving along to Gfinity, and here ricochet off a rising 50-day line yesterday. We're back up at our second target there at 0.082 and looking for the next level up, which will hopefully be as high as 0.12 by the end of this month. It really looks as though this stock is turning itself around in a decent way, especially after the golden cross that we had last month. Next up is Ilika, which seems to be the only person looking at this one, but it seems to be delivering. We've had a gap higher today. In fact, it's a little mini bear trap island reversal, one of the strongest signals around. Hit our target there, second target there at the top of the broadening triangle from March. Next target up to 45 by the end of this month, while we're above the low 30s, maybe 31, 32, will cap any fallback for the shares. Inspecs is next, and here we had the gap down, but we've got a bullish divergence here, and we've broken back above the 50-day line for the first time since November. Above that 50-day line at 44 initial target, the 200-day line at 54, and then up to 65 at the top of that broadening triangle from May. But I suppose the RSI breakout through 50 and the break through the 50-day line are the two big kickers there. Next up, Marechale Capital, and here you can see that we have managed to consolidate above what was a previously very ambitious target, 2.8 above that, looking for the share still to head as high as 5.3 maybe by the end of this month. The key here, though, is holding above the previous target at 2.8, which not quite sure the shares are ready to do. On to Maytech, which has been one of the best recovery situations of the last year. You can see our favourite number one sort of setup is the bear trap island reversal, so gapping down to a new low and then gapping up, and this stock certainly delivered on that towards the 13 to 14 pence area. We're now at 32 pence. Broken the top of that rising trend channel at 27 pence, and above that, looking for the upper parallel of that rising trend channel, currently pointing as high as 38 pence by the end of this month. And you can see the gaps higher that we've had as well over the recent past. So very strong and very encouraging indeed. On to Orosur, which has also been a transformational situation. Here we had warning of the turnaround with the gap through resistance that we had at the end of November, and basically finding new support at old resistance around the 5 to 6 pence area in the last few weeks. Gapped up yesterday, broke a resistance line, which I think I covered yesterday as well, 7.6 pence, and looking for 10 pence, well, 9.75 to 10 pence, hopefully over the next few sessions. Next up is Prospex, where we got the shares ricocheting off a rising 50-day line after a golden cross that we had back in November. I'm presuming that gas prices are helping the cause here on top of the company's fundamental progress, and above 7.1 pence, looking for 9.75 basically by the end of this month, expecting this to accelerate a bit over the next few weeks. Shield Therapeutics is next, a stock which has been covered here quite a lot, and here we've got the 50 and 200-day lines both rising at the moment. That means we're in the run-up to a golden cross, which is nice, and also we're hopefully going to head to the top of that rising trend channel from April. The other point to note is we've had a double bounce off the RSI 50 level, so that's a double signal effectively, and the view here is that while we're above the 200-day line at 2.9 pence, looking for 5.5 or even 6 pence by the end of this month. Onto a stock which is not looked at very much by myself or anybody else, which is Tandem, and here I just thought I'd cover it, even though it's a crazy chart. We've got a situation where one can draw an uptrend line, as I'm just doing at the moment, from back in December 2023, top of the range, and the top of a notional triangle, a channel there rather, heading up towards the £2.60 area, and looking for that by the end of next month, while we remain above the top of that gap down that we had in June, around £1.77, so above 177, looking for decent upside there at Tandem, but a weird chart nonetheless. On to Xeros, which had a great update today, very confident update, and here you can see that we've been on the case, and only just missed our rather ambitious target there at 0.85. I suppose the line there slightly lazily drawn. It should have been like that, but no one's perfect. In the meantime, while we're above the first target there at 0.62, looking for a retest of 0.85 or even up to the 200-day line there at 0.88 by the end of this month. Finishing off with a stock which I cover very regularly, and I think one or two people keen on this one as well. We've got Valereum, rising trend channel. We've got, so this is the third or fourth target that we've had in the recent past, above 24 pence, looking for 35 pence, and that February resistance line projection. That's it for me today. More updates tomorrow.